the matrix that we look at now is, can we work with you in wholesale? Can we get you into on-premise accounts? Can we start to tell bartenders and somms and restaurants about you? Because ultimately, we want to help curate a better portfolio of non-alc products on-prem that helps drive off-prem. And our ability to do that simultaneously is unique in this space.
You're listening to Retail Remix, your inside access to candid conversations with the people shaping retail's future. Here's your host, Alicia Esposito.
One thing we can always say about the retail industry is that it is always changing. And fast. If you want more proof, well, you can listen to today's episode. A few months back, I sat down with Nick Bodkins, founder of Boisson. And I've covered the company before, but I wanted to check in with him and really get an insight into not just the evolution of the business, but the evolution of the non-alcoholic beverage market itself, the growth that it was seeing, and how consumer interest and focus on sober, curious lifestyles had unlocked new growth opportunities for Boisson. Nick described Boisson as the Sephora of NA, that it used a combination of compelling digital content, passionate store employees in neighborhood-style spots, and even a curation-led approach to merchandising to not just reaffirm its value proposition, but better connect with consumers. And honestly, the company appeared to be thriving since its inception in 2021. But last week, we saw the headline. Boisson had filed for Chapter 11 bankruptcy protection and would immediately shutter the stores that so many people came to love. Now, the company is focused on building its wholesale and e-commerce businesses, and Nick shared in a LinkedIn update that these operations will continue, quote-unquote, without interruption. And Nick? Well, he's looking for his next adventure while reflecting on what he and his team have built. He stated, "I am proud that we served more than 250,000 customers. Of the deep and meaningful wholesale partners who embraced NA for their customers, and proud of the awareness and education we brought to consumers, introducing them to NA through partnerships we forged with brands and communities." And honestly, regardless of this news, I truly believe Boisson can teach the entire retail industry, not just the NA market, about how to be intentional about brick and mortar, how to creatively embrace partnerships to drive awareness, acquisition, and retention, and perhaps most of all, how powerful content and rich media can really augment your brand building efforts. That's why, again, regardless of the news, we're running today's episode as is, raw, unedited, end to end, because Nick had such incredible insight to share, such great perspective and theory around how brands should be thinking about their omnichannel strategy and their customer experiences. I loved seeing the evolution of the Boisson brand, and I can't wait to see what's next for them. But for now, listen in. I hope you enjoy today's conversation. Nick, it's so great to have you on the show. So great to catch up and hear everything that you guys have going on right now.
Yeah, great to be back. Thanks for having me.
Before we started rolling, we were just kind of regrouping a little bit and catching up. And I can't even believe it's been about 2 years since we first spoke, which is kind of unbelievable. And we got to talk about your background, your inspiration for the business. And, I want you to share a little bit about that because obviously this is a new platform, a new audience. But I guess the big thing to call out here is at the time, the NA market was still very niche, relatively small. So first off, share a little bit about the business and, where you guys fall in the NA market and, how things have been evolving since that time, because I feel like a lot has been happening.
Yeah, I think our growth has been a product of what we're seeing in the broader category, which is obviously super encouraging. Look, I think 2 years ago when we talked, NA was, Nielsen says, going to do about $300 million. Every single time I see the numbers, the CAGR has been revised upward. And we're now seeing something like 32% year-over-year growth, which I'm sure AlcBev would be happy to get a fraction of that, given that we're seeing the first declines in wine and in spirits in the United States in a very long time. But yeah, so our business is, I hate saying the word pretty unique, but our business is unique. Unlike AlcBev, where you have a sort of very specific walled off, regulatory driven route to market for brands, we operate retail stores, an e-commerce platform, and wholesale import and distribution business. So kind of spanning all three tiers of distribution. We have a couple of our own products that we make along with some partners. But for the most part, you can kind of think of us as the Sephora of non-alcoholic. For consumers that are looking for a specialty retailer that has their finger on the pulse of what's new and noteworthy in the category, we lead with education and discovery first across the omnichannel platform. We have 8, almost 9 now, retail stores in New York, California, and then soon to be in Miami. And then, like I said, our e-commerce platform. And then we primarily serve on and off-premise customers in the markets where we have a retail presence. We do have customers from around the country. That's obviously gaining some steam because we've just announced a partnership with KeHE, which is obviously really exciting and something that will allow us to extend our distribution reach further. But, most of our 400 or so on-premise customers are located in New York and California.
Got it. And my goal is to kind of break down and dig into all of these areas because it's so exciting to see how this whole ecosystem kind of fits together. But before we do, I think it's important to kind of talk about what's happening with the customer. And like I noted at the time when we were digging into your background, your story, it seemed like the decision to live a quote unquote sober lifestyle, again, was very new. It was very much surrounding things like dry January, and that's still taking place. That's still happening, it seems, but it seems like the context surrounding it for everyone is kind of evolving. And I was planning for this conversation, and as I started to research and dig into this, I couldn't help but wonder the impact of social media and how it's kind of influenced this market in particular, because obviously it's a source of discovery, it's a source of inspiration, and that obviously connects to health and wellness and lifestyle information. And it seems like it's been an accelerator almost of conversations around NA and, discovering new brands. And I'm curious, how these dots connect for your business and more so the culture of it all, right? Because it seems like it's NA is part of just such a much bigger conversation right now. I mean, is that something that you're seeing as well?
Yeah, I think to take a bit of a step back, the first thing that has sort of solidified for us is that our customer in general, there's obviously a small percentage that are, but our customer in general is not a sober customer. Our customer in general is now looking at their relationship with alcohol and taking a more mindful approach to drinking. And I think that everyone likes to talk about before times and the after times of before and after COVID. But I think if you actually take a sort of philosophical approach to this category and really look at the underpinnings of what was happening, we had a couple of things all happening at once, right? So COVID as a cultural impact sort of sharpened all of our focus on the relationship that we have with alcohol. So that's one thing. The second thing is we were in a near zero interest rate environment, which means that equity into emerging consumer packaged goods, which obviously the beverage category falls into, but investment into that category was extremely strong and at very, very high valuations. So there's a lot of entrance into the market. And I think the third thing really is just that a lot of these brands had already started to see a health and wellness trend emerging. And in doing so, had already started to build out higher quality liquids than, what I sort of jokingly call the O'Doul's generation, where we all knew it was garbage, but
Yeah.
it was the only thing that was dusty behind the bar that was an option. And so I think all of those things, that sort of confluence of events coming together, gave us a few things that you can see the last time that we talked, which is a bunch of brands that thought they were going to go to market via traditional alcohol distributors and build their brands in on-premise and then try to build them off-premise later, which is very common in beverage, right? You start by mixologists and somms and bartenders telling you what you should drink. And then eventually that builds into a clustered approach to placements in off-premise. COVID changed that approach really quickly, obviously, and all of these brands flush with D2C with cash were basically forced to pivot to D2C. And coming out of that, now we're seeing a maturing of the market whereby I think that retail is going to play a much larger role in this category. I think that relationship that exists between on and off premise in beverage is starting to re-solidify itself. And I think that consumers are just in general smarter. And I don't know if that's social media or not, because I actually sort of like jokingly say sometimes that like NA is helping us in the same way that like Be Real helps people with like a social media addiction. It's like, no, like you've got all your other stuff that you do. You've got alcohol. Like this is the one thing that you can do that like it takes just a little bit of time and it's like a positive change in the way that you think about your relationship with alcohol or in that case with social media. So yeah, that's a really long answer to your question. I hope that's there. I'm sure there's probably some stuff to unpack, but yeah.
Yeah. I think your point that I completely glossed over, and I appreciate you bringing it up, is just kind of where the brands were and have been as we think about customer acquisition. And I recall our first conversation, we were talking about like the economics of it all, like operating D2C as a beverage brand or an A brand, being able to get the products to the customer as quickly as they're expecting, but then like having it shake out financially is like very difficult, right? And that's where your stores came in.
Yeah, well, and for us, it fundamentally is part of the thing that separates us from the individual brands.
Yeah.
An online consumer for us spends over $125 on their first order on average. They buy 4 brands and 6 products. Like that doesn't happen with an individual brand. And I have to tell you that like shipping is expensive. Shipping product that isn't necessarily available in mass at your local grocery store yet in the way that you want is convenient. But there are also, I mean, we're sitting here talking on Monday, we're about to get 8 inches of snow in New York City. And our team is constantly looking at 2, 5, and 7-day weather forecasts to understand when we can ship product, because unlike alcohol, this will freeze in the winter. And so there are a lot of logistics and other concerns that are extremely, extremely limiting on the direct-to-consumer side of the business. It's not sending razor blades. It's not sending vitamins. It's a heavy product. And I think that a lot of brands that you're seeing now, they've shifted their focus to how do we get in as many doors, in as many grocery stores as possible. And I think that's a double-edged sword, honestly, Alicia, because like, I don't know that we're at the same stage of this category that the meat alternatives are, or alternative milks are, for example. Like, we are still in a pulling environment and not a pushing environment. The brands are not strong enough on their own to be able to be like, all I need to do is push you to a grocery store and we're going to get the sell through, right? Like, grocery has 50 to 100,000 SKUs and you have no idea where this is going to end up. And I think a lot of brands are realizing that despite what they're telling their investors, like 2,000 doors doesn't necessarily mean velocity. It doesn't necessarily mean sell through. If you look at Boisson, one of our stores sells 20 to 50 times on a weekly basis for some of our brands what a grocery store like a Target or a Whole Foods does. And so we only have 9 stores, right? So like, there is a functional ceiling to that. And there are a lot of promises that have been made in this fundraising environment that brands have got to look at. But when we look at the effect that we're having on the brands overall, we like to say that we're like the pedestal, where we've shined the pedestal and focused the lights and we're putting the brands there to introduce them to consumers. And now, the reason why our business is shifting to support and service brands into wholesale and into other retailers is because we see the smoke basically before fire with brands that we think are promising. So that's kind of how that's the real crux of how our business has evolved in the last couple of years.
Yeah, that's amazing. And I do want to start with like that D2C, like digital experience, because I know, in our first conversation, what really captured my attention about your brand, your approach, is that it was very elevated. It was very education driven. And we noted in our conversation how curated and thoughtful that approach is. And I mean, looking at that purchase rate, like the average people spend when they come to your D2C site, I mean, that's pretty much the testament to that. But I mean, what other adjustments or improvements have been made to the D2C experience? Any notable investments that you've been making in this area? Again, just considering the dynamics of the broader ecosystem and
Yeah.
basically everything you just shared in your last statement, right?
Yeah, so a couple of things. I mean, the first one, which is it's kind of a hard pill to swallow for some, but that is that like at this point, our customers broadly trust us, and telling us I have a new product and you should carry it on your site or in your stores is not really good enough anymore. It's like for a while we kind of were in a position, given the speed and the growth of the category, that like we weren't really ready to pick winners yet. We were kind of seeing how the category started to play itself out. But like our customers review products, they review them at an extremely high rate. And we look at a number of factors, whether or not we're going to carry a product at all. Because if you tell me, oh, well, I have this brand, but I've signed up every alcohol distributor in every state, you just have to buy from them. Well, alcohol distributors aren't really doing anything for me because they don't deliver to my stores. They don't deliver individually to all of my stores. I'm doing all of that. And so all an alcohol distributor is doing for our business is taking very much needed margin away from us for the sole purpose of perpetuating the existing alcohol distributor relationships, right? So like liquor stores can survive on a lower margin because, and this is an unfortunate fact, you're going to have people that drink every single day that line up to get that fifth of vodka at 9 o'clock in the morning when the liquor store opens. And there is a habit involved in drinking that will keep a certain amount of business coming into stores. We can't survive on those same margins. We just don't. No retailer outside of a grocery store or a liquor or wine store survives on those margins. And so it's been a little bit of a hard conversation to have there because our e-commerce store is an extension of that. Because remember, we're the ones getting paid media in front of customers to introduce them to the category. We've invested in content. We're investing in our technological infrastructure, our warehousing and logistics infrastructure. And so there's a lot of work that's been done to stand up that part of the business. And we've got to convince our investors that there's going to be scale here beyond even the success that we've had so far that gets us. It's not like, we're not profitable in e-commerce yet. Like there's a number that we will get to that will make us profitable in e-com. What I mean by that is like on an individual order basis, yes. But when you fully load in all the cost of building out our infrastructure, no. And so that curated collection has become, liquid first, right? If the product isn't delicious, then obviously the rest of it doesn't, telling us you'll give us a great margin and let us distribute it for you doesn't really help. But the matrix that we look at now is, can we work with you in wholesale? Can we get you into on-premise accounts? Can we start to tell bartenders and somms and restaurants about you? Because ultimately, we want to help curate a better portfolio of non-alc products on-prem that helps drive off-prem. And our ability to do that simultaneously is unique in this space. And so again, like that infrastructure investment has been omni-channel. We're running stores that have rent and employee salaries, and we provide health insurance and benefits and paid leave and time off for our people and everything else that you would hope that a responsible organization would do. And so just the overall unit economics of how the business would work, a lot of the cost structure ends up falling on us. And so we've really had to sharpen our pencils in terms of how we bring new brands into the fold. Are they additive? Are they filling a need that hasn't necessarily been filled yet? And how widely can we actually work with that brand? So that's kind of like our thought process now.
Interesting. Very fascinating. And I think I saw a number here around just like your wholesale vision and the growth potential. I think it's your wholesale business is poised to grow 70% by 2025. Is that accurate?
Yeah, so it is, except for that it's actually accelerating faster
okay.
than that. So yeah, so that's, I think our ambitions were largely focused on-premise placements and, how do we get more restaurants to be buying more products and building a better NA menu? And then how do we get them to buy more often, which means that they're selling more product to more people? What's happening now is that we're now, thanks to this distribution agreement we have in place with KeHE and then separately with LibDib, that off-premise part of the business is really starting to gain some traction because larger retailers are coming to us now and saying, listen, like, our buyers are getting pitched 500 different things. We have no idea where the real traction is, but you guys are the specialty retailer. How do we work together? I'm like, well, okay, we can distribute to you. We can help you curate this entire section of your store, and we can make sure what you actually have then is that push to retail, right? So telling Boisson customers in the middle of the country, it is actually more beneficial to you. You will get it faster if we get placement into, say, into Total Wines or into Specs or into something in Dallas or Houston or Chicago or some area there. You will get it faster and we will be better served. Boisson, you, the customer, will be better served by getting it there, whereby we're actually distributing that to Total Wine or we're distributing it to Central Market or to Specs or like whatever that is. And that's where that calculus of, is this D2C e-commerce piece, does it actually does it make sense for every market all the time in the future? Or are we going to continue to see that grow alongside where we make the broader category plays into retail?
I'm sure data plays like a huge role in the process, right?
Huge.
Yeah.
Huge.
Yeah, because like there's that tricky balance, right? And I guess this kind of connects to your mission again of like making sure you have like the best quality brands, the best quality products, and then getting it again to the customer as efficiently as possible. And I'm curious, like how you're achieving those two things in a way that supports growth, right? Because I feel like there's been this like mantra of like growth at all costs, right? Especially through an online lens. And it seems like you guys are still very much focused on maintaining the mission, which is getting the best brands, curating them, educating the market. But then you're achieving this level of growth and expansion. Like, I'm curious, like, how do you balance those two things? And maybe you don't have an answer just yet, but I mean, I'm sure a lot of the folks listening are in a similar place where it's like, okay, we want to acquire more customers. We want to achieve this growth and this scale. But then there's always like this question of like, okay, like to what end, right? Is really the question. But how do you do that?
Totally. And I think, have we figured it out yet? It's funny. I was kind of chuckling as you said that because, we're internally now, we obviously are going to raise some more money. We're a business that we think that there is still more value to be created in our business and still more growing to do. But there's kind of a couple of different paths that we actually have the opportunity to go down now. And I think really dialing in for our investors, what the expectation is, right? Because like if you look at traditional sort of like venture capital numbers, venture capitalists playing in or investing in the CPG space are kind of like looking for that like liquid death poppy like categoric rise and exit, which like they have to do that because the vast majority of what they're actually looking at is considerably like less than that, right? Like they're going to be 900 losers or 990 losers for 10 winners. But if you look at our business, the way that we've structured our business, that like retail getting to profitability on its own and understanding, like we don't think there necessarily needs to be 150 Boissons around the country, that we could actually be better served by store within stores and like helping to curate that collection in traditional retailers where like, you could potentially see like a little Boisson section in a larger retailer. That to us obviously means it's more capital efficient, right? That we're still seeing that data and insights and analytics play out. We still have the opportunity there to layer on a sales team that goes out into bars and restaurants in that environment around where we've gotten those placements in a way that allows us to very carefully continue that evolution of curating menus on-prem and driving demand off-prem. And then the volume that we are going to see in the business that will be an outsized part of that growth is that, the non-out business, the non-out category is probably between on-premise and off-premise. It's probably going to be close to 3% of global alcohol by 2027. And you're talking about like several tens of billions of dollars, somewhere in the like $25 to $30 billion range. Any investor looking at the size of like a total addressable market of a potential category would look at that and say, oh my gosh, that is absolutely investable. It's really how bifurcated or concentrated does that growth look like, right? Is it all coming from Heineken and Diageo and Guinness and Heineken Zero and beer? Is it going to be another revolution like the craft beer space where there were tons of players, which were unfortunately hamstrung by alcohol regulation, which really sort of stifled some of that innovation and growth? Or is it going to continue to grow in sort of distinct pockets? And I think we're still waiting on what exactly that's going to look like. The way that we have looked at building our business is when investors look at us, sometimes you kind of have two sides of the coin. The one piece is you guys are building too much, which I completely understand. The other side of the coin is, wow, you have a very diversified stream of revenue that's coming in. You are not just a D2C business. You're not just a retail business. If it is cold or raining or snowy or windy outside, we can still sell online. If it's 9 o'clock or 10 o'clock at night, restaurants can still serve our product and then buy from us the next day in wholesale. Like that, for me, I think shows the potential that we've got here to transcend being boxed into a specific category. But I'll be the first to admit that it's a bet right now. It's a bet on how that's going to play out. We've really tried to build a super category rich, category deep, experienced team. And that's really how we're going to continue to work on the business.
Right. And to your point around this business model is driven by this diversified approach to revenue and services, which is part of the reason why I find your business so fascinating, frankly, and that there are those two trains of thought, right? Of like, oh, well, this is expensive. This is like a lot of bets. And then others like seem to get it. Is that kind of like how you gauge like who it makes the most sense, like as an investment partner for the business, like that there's just like that click, like people just like get what you're trying to do? I'm curious, like how you think about that.
Yeah. So the short answer is yes. I think that as we've started to have conversations with bigger funds that are saying, well, how do we deploy a lot more capital in this space? I think it becomes very clear very quickly based on some of the initial conversations we have, whether it makes sense to have that bigger, longer conversation with them, because we're very straightforward, very upfront about, what our ambitions are. We think this business could easily be 9 figures in revenue and that we could capture a pretty significant portion of the continued growth in the space in the United States specifically, but potentially more broadly globally. But it's part of the reason why we wanted to approach and work with a strategic investor earlier on rather than later. We obviously haven't talked in a while, but we've taken a substantial investment from the corporate venture arm at Pernod Ricard. And I think one of the reasons why we did that is their inherent scale and supply chain and logistics and experience. And the fact that Pernod in general is looking at brand portfolio curation in a time horizon that's in like decades and generations and not in weeks and quarters. And so they really see what that scale can be whenever you find product market fit with consumers. And so they're just as eager as we are in terms of looking at how this category continues to shake out.
And I do want to make sure we hit on that services and the hospitality side of this business model, because again, I think there's power in that diversified approach. And I'm noticing that more and more brands are thinking of like the broader context of like how our products show up, where they show up, and, how they can best support these more cultural and community driven experiences. Obviously, it's a very natural extension for your brand. And we've talked about a few great partnerships that you've done, activations, et cetera. And I'm curious, like, how this will continue to serve as a jumping off point. Obviously, showing up in bars and restaurants is one thing, but another to do these completely like elevated partnerships and experiences. So I don't know if you want to touch a little bit on like what has been done in the past and what has been effective and how that will continue to play a role. But I think in general, retail taking cues and clues from hospitality, even bringing those worlds together, is just an ever evolving trend in this space.
Yeah. I mean, I think where we've seen the most success on the what we would kind of call like partnership or brand adjacency side is just basically meeting customers where they are and helping them understand that integrating non-alcoholic options into what otherwise might be only an occasion for drinking alcohol is actually a completely reasonable thing to do. One of those that comes to mind is we did the first ever non-alcoholic pairing dinner at Aspen Food and Wine. And it's actually where I sort of happened to meet Andrew Zimmern, the chef and huge advocate for this category. And he and I were sitting next to each other, and Roy Choi, the chef, was doing the dinner, and we were talking for a while. And we got to the end, and Andrew just said to me, he was like, at the time, he's very public about this. So I don't think he would mind if I said this, but he said, I've been sober for 30 years now, and this is the first time that I've sat at a dinner and I felt completely included in the entire offering, where no one at the table was, this is 60, 80 people at this dinner, no one at these tables, they're not bringing me something separate or saying, oh, you're not drinking, because the entire event experience was inclusive. And so there were people that in each dish that came out through each course, you could choose the NA option or a low alc option or a full alc option. But there were so many different choices being made around the table that in no way was anyone that chose to say, I'm going to do an alcoholic drink one time, a low drink the second course, a non-alc drink the third course. Andrew and I sitting there together and choosing the non-alc options for each one, no one looked at that differently. And so I sort of jokingly say it all the time, but like I oftentimes talk about like when you go into Starbucks at 3:00 in the afternoon and you get like a decaf coffee because like it's hot outside, you want a nice coffee, but like you don't want to be up all night long. No one like rings the bell and says like, we've got a decaf drinker here. No one calls you out for it or anything else. Like it is literally an order that is taken, put into a cup, the sticker goes on it, and you go on about your way, and they charge you the same for it, even though the caffeine has been taken out of it, and you go on your way because you've purpose built a drink choice for the day part of the day. That's really where we focused on our partnership. So you see things where like we show up where you would never expect us, right? Like we did a thing with Camp Poosh with the Kardashians at Coachella this last year.
I saw
We're
that.
at the Snow Lodge and the Surf Lodge between Aspen and Montauk, like two places that you would never imagine non-alc being. But like you'd be surprised to learn potentially that like we outsell non-alcoholic beer at the Snow Lodge in Aspen. So like this is people just changing their relationship with NA. And, the not so surprising part about it is if you put it on the menu, people will order it. The data actually shows that it's across all age categories. It's 1 in 8 would choose in any out of home setting. If you switch that to millennials, it's 1 in 4. So imagine as a restaurant or a bar having 1 in 4 consumers that walk in ready to buy something and you don't have that on the menu.
Yep.
It makes no sense. And so that for us, like being at, we're going to be at South Beach Food and Wine now. The fun part is that Andrew and I have developed a great friendship, and we're actually doing his dinner at South Beach Food and Wine in 2 weeks. We're trying to show up in those places where we can normalize the more mindful approach to drinking. And that's been kind of the North Star for the partnership side of the business.
Yeah, it's so interesting. And I think, that takeaway in and of itself of like showing up in unexpected places that like the more you think about it, it's like, oh, like this does actually make a lot of sense, I think is something that everyone can kind of take cues from as they think about experience strategy and beyond the 4 walls of the store, so to speak.
Yep, that's exactly right.
Awesome. Well, and before we close things out, Nick, I do want to make sure we do talk about the stores because you have seen a lot of growth. I know, the stores have been an important connecting point, both from a fulfillment perspective, but also just a really great opportunity for people to better immerse themselves and educate themselves about the space. You mentioned a Miami store opening soon, which I found to be very interesting because, it is a very clubby city, a lot of going out, a lot of entertaining. But I think your last response kind of connected those dots, really effectively. But is there anything else you can share around your growth plans for stores, how the store experience has evolved as your brand has evolved too?
Yeah, so continuing to make sure that the stores first and foremost serve as a means of education and discovery for consumers. That's a big one. If you look at Miami, like we're not in South Beach, we're at the Shops at Merritt Park in Coral Gables for a very specific reason. And it's because it's near Brickell, it's near Coral Gables, and it's where people live and they shop. Like we share a wall with an Equinox. So people come into that center to actually like live and do things on a daily basis. Like, yes, there's a Louis Vuitton underneath us, but there's also doctors and dentists and the Equinox there. And so the idea is like we're actually where people live and not where people like vacation in general.
Right.
And that sort of brings us closer to that sort of North Star of the stores being a place, a neighborhood store. They also, like you said, they serve as last mile delivery. Right now we limit that to our own e-commerce orders, but one of the things we're obviously going to be working on is, again, servicing the brands that we carry. So you can imagine, hopefully before the end of the year, that if you are a brand that works with us closely, there's a possibility that you could sell to a D2C consumer in Miami or in New York or in LA or in San Francisco on your own website. That order passes through to us and we can fulfill it for you, thereby reducing the amount of distance that product actually has to travel to get to a consumer. And so being able to do that on the surface sounds really, really convenient for the customer, but it's so hard to do. Like logistically, it's really, really difficult to do because you have like inventory controls. You've got like all of the ERP and technology and like how the orders get routed and everything else. It's been admittedly like a bit of a nightmare. There are people that have like sent us emails that were like, my order's gotten lost, or it's been a week since you guys got it, and like all sorts of stuff. And it's so frustrating because like I'm that person that's like, let's get it out the door in like 4 hours or whatever. And our whole team shares that philosophy. But trying to balance when those big moments are going to be, the stores certainly can help us do that. And that's the intention. And I think in terms of continued expansion and growth, I think we're being really purposeful about it. Like we did it very quickly. We did some like pop-up stores that worked and some that didn't. But we're being really thoughtful now about sort of keeping that North Star of trying to make sure that their education and discovery spaces first, they showcase the products really well without being overwhelming, and that they're in neighborhoods where people live.
That's actually a really important nuance that I just want to make sure we emphasize, because I know we've been covering a lot about the evolution of, shopping centers and shopping mall experiences, and that idea that you're like right by an Equinox and, you're right by like doctor's offices, and it's more contextual again to how the consumer is living and whatever day they do errands, right? And they can kind of hit all of those spots at once. That is a very thoughtful approach, I think, as we think about brick and mortar strategy and like where you really show up in consumers' lives.
Yeah, that's exactly right. And I mean, I think we're trying to be really thoughtful also about placing the stores to take advantage of our ability to deliver locally. It's, if you look at like Los Angeles, we're in Brentwood, which services the West Side. We're in Studio City that services, Studio City, North Hollywood, all the way to Calabasas. Like we try to put the stores in an area where it's convenient. Yeah, but I think that people do inherently still like getting in and talking and like being there for tastings and like all sorts of things like that. And, we don't have 5,000 square foot stores or 10,000 square foot stores. Like they're supposed to be small. They're supposed to be intimate. And that helps us. It actually hinders sometimes in the real estate selection because trying to find a landlord that has subdivided a space or has space available that's that small is actually more challenging than you could imagine.
Mm-hmm. Yeah, I'm sure. No, this has been amazing, Nick. And I think it ties to, our last conversation where you mentioned that you were really focusing on building a data engine and getting as much insight and understanding into the market, your consumers, the business. And I'm curious, is there anything else that the data is telling you? Anything else that you are focusing on strategically, tactically over the next year? Because, just seeing how this market is evolving and not just the demand, but the interest and the passion around this category, I just think is so fascinating and paints you guys in a great light. It creates a lot of opportunity. But is there anything else that you're keeping track of, as you continue to bring your vision for the future of Boisson to life? Anything else that we should call out that we haven't yet?
Yeah, I do think, I certainly hope it's not us, but I think there's going to be some consolidation in the space in the next like 18 to 24 months. I don't think everyone's going to survive. That's what I meant by the hope it's not us. Like what we're doing is very ambitious, but like it inherently require continued investment. Like we are not a business that like one of those 5-minute grocery deliveries that like somehow as they sell more, they actually lose more. Like we actually do have a fundamentally good business model, and we have a pathway to, I recognize that this is not necessarily a consumer podcast, but like we have a pathway to profitability, which is a necessary but not sufficient condition for businesses. And I think getting to cash flow break even and getting to some semblance of profitability means that we largely are in a position then to control our own destiny. And so where we go and raise money, it's purposeful. It's to tell investors this money that we want to take in the form of equity will be used to grow in these areas, not to continue to exist to hope to someday make money. And that's like a really, really important thing in this category. Anyone listening to this that has been raising in the last year and a half, I am sympathetic because it is a completely different environment than I think has happened in the last probably decade or more. It is brutal. There are questions being asked that were never being asked for companies as early on. The only other thing that I would say that I don't want to get lost here is seeking pods, seeking points of distribution for points of distribution's sake is a really short-sighted way of growing the business. Getting into a retailer without the proper merchandising, the proper marketing, the proper promotions, the proper shelf talkers and spacing and like everything. I am proud of all these brands that we work with that have gotten into grocery, but it terrifies me that if they do it too early and without a plan, then grocery, which has a outsized impact on a lot of categories, potentially writes off part of this category and says, nope, it's not going to do well. It's like, well, no, it's actually too early. It still belongs in specialty retail, but we're going to throw some stuff on our shelves and hope that it sticks. Throwing it on the shelf because it's convenient, because it comes from a distributor you work with, is how we got O'Doul's. And I don't think we want to repeat that. Mm-hmm. Off my soapbox now. I'm sorry.
Yeah. No, it's great. And I know it's such a fast changing space. I know, we've been covering a lot of different, even just general like CPG consumer brands and their growth, and then, the pitfalls and the stumbles to growth. And it's just like a lot of dynamics at play. I think you called out a lot of the big headlines and learnings, especially around logistics and expansion. And it's really interesting to hear how thoughtful and nuanced you guys are getting in this whole process. So really appreciate you taking the time, number one, and number two, for sharing so much detail, because I think, the key goal for this show is to not just dig into like what's happening in the landscape, but like really, how people are applying it and how people are learning, through this process. So I really appreciate the time.
Thanks so much. Yeah, really appreciate it. And yeah, happy to get back together to chat anytime.
Sounds great. And to all of you, if you do have any follow-up questions, I'm sure Nick will happily answer them. Drop us a line on social media, on LinkedIn. We're at Retail Touchpoints. You'll see new episodes drop every week. And of course, we're on Twitter or X as well. We'd love to keep this conversation going because I find it to be so fascinating. And, just looking at the intersections of community, culture, lifestyle, and how it's really creating new opportunities and new trends for all of these brands. So would love to hear your thoughts on this market as well. And of course, would love to hear your thoughts on the show. Leave us a rating or review on your preferred podcast player. We're on Apple Podcasts, Spotify, Stitcher, anywhere else. We're probably there too. So we'd love to hear from you. And of course, be sure to subscribe to the show. We have new episodes coming to you weekly where we're digging into, the latest trends in retail and CPG, and having great folks like Nick on the show to share their insights and their lessons and all the great things their brands are doing. But for now, that is it from us, everyone. Thank you again so much for joining us. We will see you next week. Take care. Thanks for listening to this episode of Retail Remix. Be sure to subscribe so you never miss an episode. You can find us on your favorite podcast player. Until next time, keep mixing it up.